Many investors and traders will hear the term profit taking and assume that that means you sell your entire position. While selling your entire position will lock in your gains and help you avoid giving back any profits in the event of a sell-off, if you do that, it also prevents you from profiting if your stock or asset continues to rise in value. However, if you don't take profits, then it's possible prices could roll over and you could lose all of your profits and maybe even some of the investment capital. The solution is to not sell everything. Once I've got a certain amount of profit in an asset, and it changes depending on what the asset is, I'll sell a small part of it just to reduce my cost basis and to lock in those profits. However, I always want to protect myself against the possibility that it could increase in value. If the asset keeps going higher and higher and I've sold it all, I might actually FOMO in at a higher price because I'm afraid of missing out on these higher gains. So how do you pick how much profit is enough when you should start selling some of the asset? For me, it depends on the asset class, the amount of time that I think I'm going to hold on to the asset. For example, is this a short-term trade or a long-term investment? If I'm planning to hold a stock for 20 years, I'm more likely to hang on without taking profits unless we see a significant gain immediately after I buy it. For example, the sell-off in March 2020 was an unusual situation, and I ended up buying Tesla pretty close to its bottom. And within 2 months of me building my position with only 2 buys, it more than doubled from what my cost basis was. Since I didn't know how much was left to run in Tesla, I took profits selling about half the position so I could get the original investment capital out. Fortunately, I kept the other half in Tesla because it ended up more than quadrupling above where I took profits. If I had sold the entire position, sure, I would have more than doubled my money, but I would have missed out on a quadruple from where I sold. On the flip side, if I hadn't taken any profits at all, it's possible that Tesla could have rolled over and dropped below my cost basis, which would have meant I would have missed out on that profit-taking opportunity. One of my key rules to all of my investing is to never make big moves. Always make small moves. If you're buying, buy in small quantities so you have more money on the sidelines in case the asset keeps selling off. Conversely, if you're taking profits, only sell a small amount. You don't know how much higher it's going to go, and it's possible that there are more profits that you can take as it goes higher and higher. By making small moves, you'll ensure that you always have money on the sidelines to buy at lower prices, but you'll also have shares of the asset to sell at higher prices.